to close the market here in about an hour and 45 minutes here. I guess we're going to go on daylight savings time, so, strap yourself in for that offset. Gonna have to, keep the lawns from burning. But this is just the end of the market here, getting all kind of crazy, and the spreads will get wide here, and it's kind of really untradeable. It's in some regard. But just for kicks, I put orders way out here. And the 15-minute chart, I would say, is got to be the best kind of pace of the market, because you can get a signal within 1 hour, a high probability signal. Plus, you can see if you're willing to just risk anywhere from 10 to 20 pips to make 10 to 20, 40 pips. I'd say this is the ideal place to be trading as a 15-minute chart. The setups are very high probability. And you're going to find out right away whether you're right or wrong. If your broker's giving you a 3-pip spread or forcing you to trade 5 pips away from current price, now you can't have that on a retail broker. If you want to trade, if you want to have, say you're a good scalper, but you want to have money in an account that all it does is just churn away stupid trades. In other words, a scalper is going to trade really heavy right near the market, and they're only looking to make 10, 20, 40 pips on a huge position. And all day long, they're making 100, 400, losing 100, making 200, losing 50, making 100. I guess you got to get used to the number, right? So if you're making and losing a pile of money, it can really just be disturbing to you if you grew up on, if you grew up where they were putting food under the door in the closet to feed you, So if you've ever been abused, trading might be a little tough sledding, because you get a tendency to want to abuse yourself. Possibly, right? I don't know. I guess anything's possible, but looking at the, what I really wanted to do here was the Transverse Index that I thought about 5 years ago. That's what I called it. And apparently it's a Chronicle foliation. It's the only thing I could find on the internet. That was years ago, but I just had this this kind of picture of the markets rolling over on this Transverse Index pivot, and it's easy to draw this stuff looking for a double top or a triple top. Here's a double top, continues in. We found resistance here. We get this beautiful, overly dramatic behavior in RSI as opposed to what happens in real price. Now, a lot of people will say, well, the RSI is, based on price. Yes, but it's like if you had a compressor running on audio with a hard knee or soft knee, you're going to see, in other words, or it's more like a gate, an audio gate. When the market falls away, this is taking a breath. This is a spring load against what's really happening. So this would be like the suspension system in your car. If you could see how the suspension system in your car reacts to each bump you hit, and so in the rebound here, when you get you fall in a pothole here, but not really here, but this is what it feels like to the suspension, because this is like a spring-loaded event here. And when the market gives you these ripe and ready, undeniable counter, this is like the backdraft of the spring. So as you come off this edge here, you connect the dots here and get this beautiful triple whammy. And this is like, in baseball, this would be like a bunch of men on base. And there's going to be a big house cleaning. Right? You don't have to run it that steep, I guess. Get a little carried away there. As you tend to do when you see all these juicy signals in here. Of course, this breakout here Not a big move. And when this happened, this was such a lackluster rally of 20 pips, but look at this absolute rally in the, now more overbought. But if you look at one more kernel inside of here, you'll see that if you reference these 2 points against these 2 points, you're looking at the backdraft of the download, of the coming down. So here is your inverted, where you're more overbought but a lower price. Now, what you're supposed to do is take this interval, copy it out, find the lowest point between those 2 intervals. This is just geometry, really. This is just simple geometry, I suppose, right? Triangles, and I guess so. You have to have a little. You have to have a little bit of to do this style of trading. You need a little bit of geometry in your brain. Of course, it's not hard to, see the triangle forming here right now. This is the 30-minute, and sometimes you watch in these markets, it'll just put you in a coma. It's so boring. So here's where it's getting boring. Here's where there's one last price pulse, and maybe it's going to be a down. I put in a buy limit here. I'm not expecting too much now. I think this thing has played out almost back to where it broke out. Sadly for the guy that got in here, he's kind of like up 20 pips, and he's like, gosh, I had a stop down here, and I had a white knuckle ride all day. It's not hard to map this stuff out. Now here's another hidden entry here, if you're into divergences on RSI, is lower. And here's the, so you have to kind of put a vertical line in here to see it sometimes, because otherwise it can look a little offsetting. But the nice thing about RSI is it's nice and sharp and clean. There's no ambiguity in this system of trading. You have to really, I guess, be able to roll with the punches. In other words, at least on the 15, this is a 30-minute chart here. So if you had a trailing buy stop and you just literally kept dropping, and they're evaporating or they're stacking up, once you got filled here, you would have to have a wide enough stop on these entries to withstand this pullback of 10 pips here. All right, now you've got the triangle forming in RSI, and you have the triangle forming in price simultaneously. Just about to break out there, just about to break out there. Go to the 1 hour, and another nice thing about drawing on close is that all your times, if you built your thing on the 1 hour, so you built all these price pivots, there's less trading and less risk on the 1 hour because there's just less trading. So you can trade twice as much on the 15 because you're trading super tight. Here you need to give it at least 30 pips of risk per order. So if you had a buy limit here, you never got filled, but you got filled on this buy limit here. But these were, you got filled on this kickback into here. Had you had a, 20 pip stop on that. So your stops are always going to be like this, but you're looking to make 10 and 20. Market doesn't always give you a lot of pips though. That's the only problem. So really, to be realistic, you want to think in terms of how patient are you? Can you wait an hour to get paid, or can you wait 3 hours to get paid? Or as this is plunging, this is 15, a half hour, 45 minutes, 1 hour, bam. And you either got the buy limit set here to get tagged in at key pivots, and you can get more arguments for the pivot on this. So this is the point of this. This double bottom here keys off of that. But it's going to look like a big mess. To do it right and to really diversify your order entry, you'd have a buy limit here. You never got filled. But you had to because that was a double top. But for momentum situations on the 5-minute, if you really need to trade, if you have to trade, like you literally, life depends on it, or you're going to like start crawling. You're buying, say, at the market here with a stop under this, right? You have to trade, like there's a gun to your head, and you have a buy limit here. So if you have a buy limit here, where's your stop? Well, criminy, you know, you got to like, this is the problem in trading. Okay, well, where'd you put a stop? Well, I'd probably have another buy limit here. Maybe put a master stop down here and just think, well, don't get in too heavy, but look at the double top. Triple top became a bottom, didn't come back to it. This is where you're really splitting hairs. You're talking about living in a world of 5 to 8 pips. But it is lower risk here because you bought at the market here with, say, a stop either here or here. And you just have to figure, well, you know, it's a beautiful pattern. I guess in the 15, not really. But here would be your argument for a breakout on RSI where price hasn't broken out, is come back to this top. So, and then come in with this one. Well, here's the head and shoulders. Right, so there's the head to the shoulder, and here's the neckline, I guess you call it here. And you're gonna do a transverse index of that. You're gonna drag that to there. See how those keys is? It's the this would be your argument to go long. And then from the support and resistance aspect of RSI, just let me do that before I run out of tape. If you look at the, you just treat this as if it's price. You'd have a support level here. So double bottom becomes a top. And then when it comes back through it here, you're keeping your eye out for the transverse index, which should be major bottom to a top, becomes a top. And now this should be your whatever degree of this angle, whatever angle that is, who cares, right? But you keep dragging that to find the rollover points, right? You're just always hanging that off the last known peak. And it's telling you into the future, the next rhythmic event. All right, and now you have to find the other direction. So look for a major turn. I guess this is the steepest one. This is like really jumps out. And this is almost a 90-degree cut to the other one. Maybe it's too steep because I could have got maybe a nice, but at least you've got a nice double top here. Kind of comes down. Maybe this does need to be a little more like this. All right, and then copy this back to see. Yeah, see, that's actually probably peak to bottom. That's the better. But once you establish that core index, then it's just a matter of the market keeps churning and grinding. The war of attrition. Okay, now here's a possible channel we could jump down, but RSI's got the. Now you just have to copy these into the future, so you kind of got to keep up on this. You could just pick a linear grid. But once you see it scroll its way down here, you're already on the lookout for a reversal, which means more oversold. As soon as it pokes down there and closes within the 30 minutes, and you may say maybe you got a buy limit just here where everybody's going to get stopped out, and maybe you kind of have to you have to trade pretty conservatively most of the time. You can't trade like, like see this is going to take forever. This may not happen today. It's itching to break out of that thing, and this is pulling back, so it's a decent setup for slightly long currently.